Hello and welcome to Donutian Investment. This analysis is for Newmont on the New York Stock Exchange as of 25th of July 2026 with a share price of $93.19. The full report is on donutian.ca. A weight at $93.19 on the short term. Gold is correcting, so hold off on a fresh entry. But Newmont is a cheap, cash-gushing gold major whose medium call is buy and whose long-term call is strong buy. Newmont mines gold at an all-in cost around $1,680 an ounce against a spot price near $4,000, a margin of almost 60% on every ounce. That is producing enormous free cash flow, which is funding buybacks and debt reduction. On clean earnings, it trades around 12 times, and valuation scores 80. Genuinely attractive for the largest, best diversified gold miner in the world. Quality scores 76. On the fundamentals, this is cheap. A gold miner is a geared bet on gold, so we read the metal's trend, not just its level. Gold is high in absolute terms, but it has been correcting. It sits below a falling 50-day average, down mid-teens % from its spring peak. For the near term, that is a headwind. So rather than a hold, we say wait. Do not open a fresh position in the miner while the metal is still rolling over. Let the correction settle first. Longer term, the case is a strong buy. Central bank buying, de-dollarization, and the prospect of lower real interest rates are a durable structural bid for gold, and the largest low-cost producer is a leveraged, cash-generative way to own that theme. So the medium call is a buy, and the long-term call is a strong buy. The near-term wait is simply about respecting the correction in the metal before committing new capital. The risk is the gold price, magnified by the miner's leverage. If gold keeps correcting toward the low end of its range, Newmont falls harder than the metal. The bear case is around $76, roughly 18% below today. Newmont also has a history of operational hiccups and write-downs, so execution matters. Against that, an enormous cost margin, a cheap valuation, and a durable demand story give strong support, which is why the medium and long calls are buys, and only the near-term entry says wait. Now weigh the risk against the reward. The bull case is roughly 85% above today, the base case, the most likely, about 44%, and the bear case a fall of about 18%. So you are risking about 18 to make 85. So, our call on Newmont on the New York Stock Exchange, wait. Remember, this is for education, not financial advice. Always do your own research. This analysis is by Donutian Investment at donutian.ca. The link to the full report is in the notes below. Have a great day.